Howdy, welcome back to Dion Talk. In this video, we have Michael Zuber from One Rental at a Time. He's going to come and explain a concept that I think is really important to understand, especially with what's going on in the economy now. If you're familiar with my content, hopefully you're familiar with his content. Michael Zuber is the author of the book One Rental at a Time. This is the book that I recommended in my episode of BiggerPockets, episode 448. But in that, I was just talking about which book I suggested. What I use Mike's content for is I benefit from the fact that he's like a machine. He gets up super early every day, 7 days a week, and he reads content to put together the information that matters to investors. His opinion doesn't come from the right, doesn't come from the left. It's just, this is what will matter to investors. So I suggest that you, every morning at 7:30, except for Thursdays, it'll be 7 o'clock because he adjusts it to accommodate a guest, you log into One Rental at a Time. Because if you're like me and you're working full time, it's a lot easier as an investor if you can get your news from one source that's already been filtered through somebody like Mike. Not only is Mike an investor who's reached financial freedom, but he's spent several years now trying to help other people do the same thing. And with that, Mike, I really appreciate you coming to the show. If you could do me a favor today, and I'd like you to cover a concept that I really don't feel qualified to cover, but with your experience, I think you can really give us a good breakdown on this. Can you tell me, like I'm a 5-year-old, about a K-shaped recovery?
Oh, absolutely. This is an important topic. I studied economics in college, got a master's degree, was an accountant. So numbers are my thing. And I've again been studying the economy, what I call the consumer, for the better part of 3 decades. Real estate investing for 2 decades. And flashback a year from now, it's an amazing to think about a year ago, kind of right now, we were like, what's going on? We've essentially shut down the economy. The idea was, hey, let's shut down 3, 4, maybe 5 weeks. We'll come out of this, wash our hands, all good. So what people were starting to talk about was, hey, we're going to have a V-shaped recovery. Yes, the downward trajectory is going to be the worst we've seen. It's going to be the shortest we've seen. It's going to hit bottom and we're going to come flying back.
But not today.
Well, that kind of didn't happen. Then there was talk of a U and then a W and an L and all of these things really taking under the lens of past economic cycles, which is something I wasn't comfortable with, because what we suffered through last year was self-imposed. We essentially turned off one part of our economy, right? If you think of our economy like a 4-lane highway, one of the lanes, and I don't care which one you pick, but one of our lanes is the service industry. It's hotels and restaurants and entertainment and concerts and sporting events and all of those things. We essentially said, can't go, mass gatherings, bad. And then we had other parts of the economy, the other 3 lanes going, I'll work from home. Maybe there was a rush for webcams and, high-speed internet for Zoom calls, and maybe I bought more Clorox, and maybe I, had my, groceries delivered versus going to the grocery store. So in reality, if you think about the economy being a 4-lane highway, we asked one of our lanes, or we shut it down. Like, if you're in that lane, sorry, no go. Now they did try to address it. They gave extra unemployment. I think it was $600 the first 3 or 4 or 5 months. They tried to do a lot of things, but it wasn't really helpful. So I brought up the idea of a K-shaped recovery a year ago, and you can find it on my channel. And it's because I watch the consumer, right? The consumer is what makes the economy go, right? We are 65 to 68% consumer driven. We're not led by government spending. We're not led by companies. It's us spending. And when you turn off one of the lanes of the highway, those people just can't spend anymore. And then you have the other 3 lanes that would normally spend in that 4th lane, not spending. So those 3 lanes actually are saving money, right? They're like, I used to go to concerts and, I'm a season ticket holder for the Warriors. And guess what? I didn't have to spend 20 grand this year because they weren't collecting our money, right? So that 20 grand stayed in my account. So there was just lots of people that were in the 3 lanes that were now okay income wise, and their expenses were lower, at the unfortunate impact of this 4th lane, which was just punished. So that's the K-shaped recovery, right? The top end of the K recovered very quickly. The bottom end of the K even a year later is really still struggling. And one could argue still going down, because we had unemployment claims today that were actually up. So it's healing, but it's not healing as fast as any of us would want. So that's my first step at explaining what happened, why it was different than any other economic cycle, because this one was man-made versus the ebbs and flows of the business cycle and greed and fear. We, the leaders, the powers that be, made this happen, in my opinion.
Right. And I'm pretty sure I watched your episode talking about the K-shaped recovery, and it's been several months. One of the things that really struck home with me is the shape of the K with the recovery. It seems like the people whose livelihood was dependent on them selling their lives 1 hour at a time had the highest probability of being on that downward slope of the K. And the people who had assets that would appreciate while cash was losing its value, because we did do things to try to alleviate the suffering of the people who lost their jobs or couldn't work, or there were people that we had at our company who stopped working because they could, with no reason whatsoever, and unemployment paid more, because it was like $75,000 a year was what they were collecting on unemployment. Looking forward, if people keep trying to make their W-2 income their main source of income, they again have that high likelihood of going down. And the people who find, like with one rental at a time, having cash flowing assets, whether it's stocks, real estate, or crypto for some people now. I mean, that's what I'm seeing is without touching my properties,
Yeah.
my net worth is skyrocketing.
Yeah. When you think about the letter K, the reason it makes perfect sense is the front part of the K, we were all equal. When the economy shut down, there was about a 3 or 4 week period where we all didn't know what was going on. I was nervous. I've said many times, on Sunday morning, like the day after we shut down, like California shut down first, I got on the phone with my property manager going, "Oh my God, we got 100 and some odd, 180 some odd tenants. What's going to happen?" Right. I have emergency funds, which everybody has. I have a little more than most. So I'm like, how many months can I carry all of this? Because who knows what was going to happen that first 2, 3, 4 weeks. And then you're right. Then the K, then you get that little part of the K where those two lines diverge. And one thing we've learned, and we've learned it before, it should have been obvious, but it wasn't, is you don't bet against the Fed. The Fed, what can they do? They can control rates and they can pump liquidity. And all of that goes to assets, whether you were in the stock market, right? It fell 33% or 43% almost immediately, came roaring back. Housing, there was like a 5-week period where nothing happened, all transactions stopped, and then it came back and it was gangbusters because space is good. Crypto, same deal. I mean, anybody who owned assets won. And if you're a consumer, you lost. And that's really where I'm going now is I think you're either an investor or a consumer. Education, high school, all of this, we're raised to be consumers. If you want to go do that, you're going to work 40 years and live on 40%, which is fine if that's your choice. But if you're an investor, you're going to sacrifice, you're going to create some savings, you're going to buy assets. Assets put you on the property ladder. Assets are where wealth is created and stored. If you're just selling hours, I got bad news for you. It's not going to be fun.
So it's funny. Investor versus consumer would be a great versus video for one of mine that I do that way.
Enjoy.
But I'm always really careful with talking about rich versus poor, because there's a channel called Alux that I absorb their content too. And they get attacked anytime they point out that if you choose to do things that make you poor and you choose things to do that make you rich, in the beginning, it was still your choice. They get attacked because so many people are convinced that if you are not wealthy, it's because of your environment and it's because of the system keeping you down. It couldn't possibly be because you chose to buy the car instead of the asset and then the car later. So maybe I'll make that video.
Yeah, no, I think there's a lot to it. I mean, I can look at my personal situation, right? I was married at 19, right? And that doesn't usually bode well. I spent every penny I made until I was 30. I bought the $40,000 car when I made 24 grand. I did all kinds of stupid stuff. And it wasn't until I looked myself in the mirror and said, you're either going to work until you drop, which is my dad's plan. I mean, he said that to me is, son, I'm going to work until I die. I'm going to die at the office. I'm like, and in the beginning, when I'm 14 or 15, I'm like, go dad. Yeah, go for it. Now I'm like, that sucks. Why the hell would you want to do that? but I didn't know any better. That's just the environment I was raised in. So at 30, I had a come to Jesus meeting with myself. And I said, Michael, what do you want to do? Do you want to continue this lifestyle and be like your dad and work until you die? Or do you want to try to buy freedom one day at a time? And I chose the latter.
That's awesome. It's weird. There's kind of a parallel with my childhood. My father always said basically the same thing. He said, you know, and he's from the generation where it was kind of okay to be sexist, I guess. He always said, it's a man's job to work until you die, which he technically kind of did. He was in his 70s, still working, had an accident on the job site. And
wow.
so it wasn't my goal to work until my 70s or have to be working into my 70s. And so I've always had that kind of entrepreneurial wish mindset, not quite the right mindset. And I've tried several businesses. I tried running a trucking company that delivered furniture. I fell flat on my face with a couple of different ventures. And every time I looked around and I saw people who completely failed with real estate investing, like they messed up and had to get out of it, they were pretty good. They still had an asset to sell at the end of that. And they took a little bit of a loss. I started companies $150,000, $200,000 later. And I said, I have to shut this down, and had nothing to show for it. It was just money gone. So I really appreciate the breakdown on that. And for everybody watching, from this day forward, you're absorbing the right information to try to have the information to get the assets to be on the right side of a recovery that could be shaped like a K.
Perfect.
Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.